Good morning. Welcome to live options trading with me, Malachi, where I am showing people what I do and why I do it. This is not financial advice. This is just me, and I am streaming live to show my friends what I do because so many people asked, and I figured this was a better platform. Hopefully, it's something that can help you learn. If you are watching live and you have questions, absolutely feel free to throw them in the chat or even throw them in the chat later and I'll answer the questions on the next live if I see them. So as we can see, pre-market, I jumped in a little early. The volatility spiked and everything was red earlier. S&P futures are down. NASDAQ futures are down. Silver futures are down. Bond futures are down. They all are. It's just horrible. Note futures are down. Let's see. Gold is down. So let's look at what I trade. American Airlines. Earnings had pre-market earnings here. And looks like good earnings and yet still down. If you look at American Airlines, let's look at a one-day chart or a 4-hour chart. American Airlines has been bouncing over the last couple years down into this 11 and then up into this 16 range. I'm waiting for American Airlines to trade down near this 11 and then go long. Even though it's getting good earnings, it's going down. It's getting into that. If it gets down to this $10, $11 price range, I'll start selling puts on it. AMD, strangely, is not down this morning. Well, I guess it's down a little bit this morning, but it's still up from its lows last week. Amazon down. That's going to cut into real close to one of my puts. BABA, I don't normally trade, but it's on my watch list, is down. Salesforce creeping up after a drop yesterday. Dow Chemical, not to be confused with the Dow Jones Industrial Average. I liked Dow Chemical because its dividend payments were about 10% of its value, and then they cut their dividend payment from 70 cents to 35 cents. So if we go back, let's see here. If we go back, I think a year ago. Yeah, so we go back a year to May of 2025. Dow Chemical was trading at about $30, give or take, and paid 70 cents a quarter in dividends. That math being $2.80 divided by about $30, 9.3% in dividends. It was an amazing dividend return. And right there, we were trading at 27. So $2.80 annual if you bought that stock at $27, $28 would be 10% annual in dividends. I love dividends that pay out like that. The issue is they cut their dividends to 35 cents, which dropped it down to a 5% dividend, a little lower than I want to make on a dividend stock. I want to make money. And then Dow promptly dropped down to $20. It then recovered, had good earnings, and I do think it was probably a necessary move for them to retain some of their cash to grow. And they are paying dividends again, or still, it's 35 cents. And if you bought Dow at $20, that was a great return. They're holding right around $30 now. I have not been trading Dow Chemical recently. FedEx and FedEx Freight, I'm not currently trading. I did buy FedEx before it split. So you got, for every 2 shares of FedEx, you got 1 share of FedEx Freight, if I remember correctly. And I'm just holding that, so I have it on my watch list, but I'm not trading it. Google. Google, did they have earnings? I think they had bad earnings here, and I'm not seeing that on my... Why am I not seeing that on there? Let's just refresh that and see if it shows earnings up. Not seeing, I thought we had pre-market earnings on Google, and that was what drove them down. Let me look. Yeah, they had earnings report, I think today. Last night, 7:30, and it dropped hard. I thought the earnings should have showed up on here, but for some reason it's not showing on the earnings that was there earlier. That's going to hurt me a little bit as Google plummets hard because it is one of the tech stocks that I'm in. And here is the market open. I'm getting beeps. Something's closing. Let's see what we got going on. Robinhood down. Innovo Medical Solutions, I'm not trading. Innovo Pharmaceutical, they were had a drug that was going to come to market and got kicked back, so it dropped. Intel down, earnings today. Joby Aviation, I am not trading. I'm watching. Nvidia up with market. Okay, it was down. Palantir Defense Tech stock down. SK Hynix memory stock, they do chips, down. SpaceX down. SoFi down. Tesla earnings here. Tesla earnings were bad. Well, okay, see, here's what I get. I don't necessarily think they were bad, but they were below their estimate on their earnings, but their revenue was up. So that drove them down. That's going to hurt me. Verizon's got earnings coming out in a couple days, and Walmart is down. I would trade Walmart here at 107, but usually their options are not that great. So let's jump in and take a look at, so QQQ stuff closed, and let's just see what closed automatically. So my calls. So remember I threw on those Iron Condor trades for this week. And so my short calls both closed this morning in profit. So this is 4 days out. QQQ is down today, and I want to take advantage of that. It's kind of hitting the bottom of its range here, where we've been seeing it drop down and bounce back up. I want to take advantage of that while it's down this morning. And normally I'm not in a super hurry to trade the open, but let's take a look at the options for 7 days out on QQQ. And we're going to run down here to this 1617 delta area, one standard deviation out. We're going to $665, $625. So $4,000 wide pays $238. So $238 divided by $4,000 risk, 5.9% for the week. We're going to set that to close at 60 cents. So that would be $180 profit is my target on that. on $4,000 risk, so about 4.5% for the week on that money. Let's take a look at Google. Google was down and Tesla was down. Let's take a look at Tesla. So what we see is the IV rank on Tesla, implied volatility is high. As IV rank goes up, options values go up. You can see today's bad. We're profit and loss is down, open trades down, my net lick is down. Everything's down today. But that happens. When that happens, we take advantage of the down market to make trades, and Tesla's dropping like a rock. So let's look out. I don't know if there's going to be any options priced. Yeah, see, these aren't priced very well here for 45 days out. So we're going to go to August 21st, which is the third Friday. So the traditional end of the month options. And I'm going to, again, run down here to this 285 mark. One standard deviation. It is the 10 delta. That's perfect for me. I could go up to, and we took a big drop on that. I could go up to this 15 or 16 delta. I think 295, and I'm going to go 10 wide. So I'm risking $1,000 to make 116 in 1 month. See if that, and these are pretty tight positions. All right, and then I'm going to set it to close at 50 cents. So target about 60 cents or $60 on 1,000 or 6% in 1 month. Let's just see where my options trading power is, or buying power. So I've got 15,000 still to work with. This was a $95,000 account yesterday or 2 days ago. Now it's down. It happens on these big down moves. As soon as this goes up, then we'll recover all of that quickly. On QQQ, I may roll this, but I think it's going to bounce up. If it was not 4 days out, if it was 3 days out, I'd probably roll it. I'm going to wait because I think this will bounce up today. But what I would do is I would roll this position by buying it to close here. Let me find it. So I would have to buy to close for this price, and then I would roll it out a week or so. So 4 days plus 7, 12, 13, 11, 12, something like that. And then I'd try and get something that was going to be about the same price and roll it down. So I would look at maybe 690, and the other one was not quite 38 wide, so 40 wide. So I'd go 696.50, and that would be a credit of 78 cents. So I could theoretically roll this down to a 696.50 and pick up a credit of 80 cents or $80, or I could do 655 and actually use a little bit less buying power because the volatility's up. See, the IV rank is 74. So those are both options, but I'm going to wait and see what QQQ does this morning before I roll that out. I'll probably roll it out tomorrow if it's still being challenged. I have a feeling that we're going to see a rebound in the market in a little bit. And let's just run through the other positions. Oh, ZB, 30-year notes dropped. And I'd like to... So what we'll notice is I think my buying power is going to go up on that because it's closer. We're now pushing towards the expected move on that for August. I'm going to wait on that. I don't need any more. I don't really need to put my exposure in there. Amazon, this one's in the money. I can roll it, but I've got time. My Google call is worth 2 cents. Let's close that. I will basically, I'm just going to close this and buy it back, and it doesn't really cost me anything. It's $2 because it's 2 cents, and then the fees of 12 cents. Why do I close that? It's not going to make me any more money. The most money it can make me is another $2. But if for some reason Google were to spike up by tomorrow, it could cost me more. And not that I think it's going to go to 370, but why take the risk? So close it, and then we will sell. Let's look at 8 days out, Google at 370, and see if it's worth selling. It's $15. It's not worth selling to me right now. I'm going to wait and see if Google rebounds some before I sell that. SLV. Silver was down this morning. Let's see what my trade is. I think I want to go 8 days out and sell a... So this is going to take... It's going to pay me $59, and it's going to take $821 in buying power. So 7% for 8 days. And if I get assigned on this, I'm trading it naked or cash covered basically. It would cost me $5,000, but the buying power to hold it's pretty low. And if I get assigned, if it does drop that far down and I get assigned, I'm okay with that because it's going to dollar cost average into my other SLV position, which I'm in at 70, and bring it down to 60, which then would allow me to sell some pretty safe covered calls on that and wait for silver to bound back up. My SpaceX calls. SpaceX is rebounding nicely today. I'm just going to let those ride. I've made... Well, let's take a look. SpaceX IV rank is pretty high still, and these expire tomorrow. You know, I'm going to buy this back for 1/3. Actually, I'm going to roll this out a week with the high implied volatility. I'm going to buy it back for 125, and I'm going to sell a 122 for next week at 410. It's going to pick me up $293 for that. Let's see, would it drop a little bit? We'll just let that, see if it fills. We'll give it that chance to fill. As SpaceX goes up, I would expect that to fill. And basically what that's saying, I bought it accidentally at 121. I sold that 120, basically for 122, I sold it for 430. So let's look at the math, or 410. Let's look at the math on that. If I bought it for 122, call it, because it was 121 and change. Sold the call at 410. Now I'm in the shares at 117.19, and I'm going to sell it again for 290-ish. 293 if it bounces up. We're at 288 mid. You can see down here kind of where we're at. We're close, but minus 290. I will be in those. If I could sell them at a break even at 115 at that point. So I'm just going to keep playing the implied volatility and basically drive down my average cost on those. We'll leave that and let it run today and see if it fills. All right, I do see that we had a couple of viewers that stayed for a few seconds. Not very long, but if you have any questions, if you jump in, if you're watching, absolutely feel free to ask me some questions and throw something in the chat. I am relatively new at streaming this, although I've been trading options for quite some time. And let me know what you think or what would help you. Thank you very much, and I will see you tomorrow.